In today's video, I'm going to share with you how I'm hedging our Yieldmax positions at the highs, especially the ones that are linked to Bitcoin like CONY, OARK, Square, and TSLY. We earn over $150,000 per year in dividends at this channel, and my performance value shows that we finished the year up 26%. So we beat the S&P, which was up 24% in 2023. So we're beating the indexes here at this channel, getting both dividends and capital gains in order to live the FIRE lifestyle, which is financially independent, retire early. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. So the first thing I did to protect our Yieldmax positions was I simply lightened up on most of my Yieldmax holdings. So we can see here OARK is my largest Yieldmax holding, and I have about 20K in it. So I trimmed about $500 of OARK on Friday. Going in order as we go down in the portfolio, TSLY, I had about 13.5. I trimmed 1,000 of TSLY. And CONY, the one that's been on the biggest tear, our Yieldmax favorite right now, I trimmed about 3,000 of CONY. So I had some lots in CONY where I was up 50%. You can see some of these lots. And I know a lot of guys in Discord were up even more than that in CONY. So I thought it was time to take some profits in CONY because not only has Bitcoin had a huge move, and so has CONY, but if you want to offset erosion in these Yieldmax funds, you have to be able to rebalance around the highs. So you have to take profits at the highs and you have to rebalance at the lows. Square's no different. If you scroll down here to Square's had a huge run as well, and I lightened up on that. So I had almost 4,000 in Square, and I took the profits. Now I'm back to having a $3,500 position in Square. And I didn't want to take all these profits here, the 382, because I did not want to pay taxes. I always sold from the highest lots here. So if we open up our tax lots for, let's say, a CONY, I made sure to sell from the ones that I was up the least in. So I sold from the ones up 13%, not 50%, so I could keep that larger income, that larger dividend, and so that I don't pay much in taxes. Okay, I also raised a good amount of equity doing this because Yieldmax names are 50% maintenance. If I'm moving too fast on my phone, I apologize. I'm doing this from my phone and not on the computer. OARK, if we go to a snapshot here, you see that its margin maintenance requirement is 50%. And this is the secret to living the FIRE lifestyle. If you need help understanding maintenance, that's in my Volume 3 Margin E-Guide. So for every $100,000 I put into Yieldmax funds, 50 grand of my equity is taken up. So if I take you here to my available for withdrawal section here, this is where I live in my account. Okay, I don't look at my net account value of 480. Okay, I look at my available for withdrawal of 225. Okay, this number is where I withdraw out of my account and have to withstand margin calls with. So as you know, at this channel, if you're a follower of this channel, then you know this. But if you're new to this channel, for every $1 you put in a brokerage account, you get $4 of purchasing power. Okay, so I have about $1 million of purchasing power here at my disposal, and I just use a fraction of that purchasing power to get ahead in life. Okay, all the greats that I know of use loans and debt to get ahead, and so I use a fraction of that $1 million of purchasing power. I have about 100 grand on of margin debt right now, 122,000. It's low interest debt. Okay, I negotiated down twice. Many of my clients who bought my e-guides did the same thing, and it doesn't show up on a credit check to banks, and you can click sell at any time and it's gone. Okay, but the best part about the income that I earn is that it pays back my margin in less than a year. So if I earn 150,000 in dividends, then it pays back this margin in less than a year again. So I'll be plus 30,000 in cash by the end of the year. And then my account will also grow by that equivalent amount. So 480, let's just call it 500,000. My account will be at 650,000, all things being equal if the market is sideways. My account will be at 650. My debt will be at zero roughly, or plus 30,000 in cash, and I'll be left with all these dividend paying assets to myself, paying monthly cash flow for life that qualifies to banks for loans. Trading gains don't do this. Not even Bitcoin gains can do this. Only dividends and pay stubs from a job can qualify as income to banks. Okay, so I'm not just getting loans here to level up my account, which is true. I mean, I get loans from the SBA and I get, personal loans that I can really level up my account with, but I'm also just getting a car loan or a house loan so that I can live freely without a 9-to-5. Okay. Also, when I was trimming these names, okay, these Yieldmax names, okay, I wasn't taking much profit. I might have made a couple $100 in profit. Again, I didn't want to pay any taxes to do that. The best way to be a prudent investor and a sound investor over time is to take small wins, okay? Avoid paying taxes, you avoid losing the income, but you feel good once the pullback comes because you actually took some profit, okay? And again, you also offset the NAV erosion from Yieldmax this way as long as you rebalance on the dips. When the underlying moves higher, if it moves higher, well, then you didn't sell much and you have a larger position to win with. If it falls, you'll be glad you took some profit. Another way that I'm hedging Yieldmax names that are tied to Bitcoin is that I sell options on Mara and Riot. So Mara and Riot here, you can see I've earned about $4,000 from doing this. So Riot, I sold 2 contracts for $1,100, so about $2,200 for Riot. And then for Mara, I sold 2 contracts and got also about $10. So call it $2,000 each, $4,000 from these Bitcoin names, these Bitcoin miners that I sell options on to lower my margin debt. Okay, that's how I lowered my margin debt by $4,000. Also, when I sell options on Mara and Riot, they lower my risk because if you take the premium of $10 and you take the strike price of $20, okay, $20 in Mara and Riot minus the premium of $10 and you get a cost basis of around $10. So the market price of Riot and Mara are near the 20s, but my cost basis is near the 10s. So I have almost a 50% cushion there of downside protection, all right, with Bitcoin. And again, the $4,000 that I earned from selling these options lowered my margin some, and also it helps pay for some of these positions that I initiated recently. Okay, I've been taking profits in Bitcoin like CONY, but I've been adding to things like Bitcoin Cash, Litecoin. I don't want to talk too much about those yet, but I just bought those on the dip on Friday. And I'm hoping to get some capital gains from them, and that will help offset the lack of capital gains from our Bitcoin names in Yieldmax, okay? Just take into account that Bitcoin should be no more than 3 to 5% of your portfolio. So I have 10K CONY, all right, which is a definite Bitcoin exposure. I have 10K with Mara and Riot. Okay, you have to factor in this assignment. So I have 4K for Mara and 4K for Riot. So 8K there between the miners. So that's 20K between the miners and CONY. Then I have 5K Square, so that's 25, but it's not exactly Bitcoin, it's fintech. So I have about 50K of fintech exposure when you count OARK and PayPal, but of pure Bitcoin exposure, I have about 25K, and so you need to keep that in mind, okay? Fintech will move with Bitcoin, so even though 25 is purely Bitcoin, roughly, 50 is fintech. So 50 grand would be a pretty large swing, a pretty large amount to have in the portfolio when Bitcoin falls. So you really have to keep your Bitcoin exposure in check, okay? 10% of 500,000 is 50,000. So half of that, 5% would be 25. That's right where I'm at with Bitcoin names, 3 to 5% of your portfolio. But again, when you have fintech, keep that 50K in mind because that will move your portfolio. That will affect your volatility significantly. So another way that I'm protecting my Yieldmax and Bitcoin positions is I took some of the profits from trimming Yieldmax that I already explained to you, and I put them into IWMY because IWMY is a small cap. Okay, small cap, it's the Russell 2000. You know how I love to stay indexed at this channel. So I lowered my risk by selling from stock-specific names in Yieldmax and riskier holdings like OARK. And I put them into a better index, which is the Russell 2000. So I put them into a better name that still gives you growth like Bitcoin. The Russell 2000 has some fintech aspects, but it's more diversified than OARK and it's higher quality. So I lowered my risk there, but also kept my income the same because when I trim these Bitcoin names and these Yieldmax names, I lost a lot of income doing that. So I had to replace it by buying IWMY. So that's how I replaced my lost income and lowered my risk because I put it in a more diversified basket of stocks in the Russell 2000 than I had in stock-specific plays like Yieldmax or even in OARK. Okay, Bitcoin and Yieldmax names, they move together most of the time because they are risk-on assets, okay? So you need to understand this, that when the Fed is lowering rates, that means that it's time for risk-on again, and a lot of times Bitcoin moves with tech because it's a signal of, again, risk being on. So the risk-on trade means that, again, Bitcoin will move with tech, so I use tech shorts to hedge Bitcoin. Okay, I use SARK for OARK, which I don't need right now because OARK pays me such a large dividend. I don't really need to hedge OARK, but I use SARK to hedge OARK when I need to. And you can even use TZA for the triple Russell short if you want to hedge small caps. But when it comes to Bitcoin names, I think you have to employ position size management. If you can find some pure hedges on Bitcoin, please list those in the comment section below. I just hedge Bitcoin positions with position size management. Okay, I trim them out, I keep them small so I can only lose a certain amount. With Litecoin, for example, I bought 2,000 of that. You can only lose 2,000, so that's not going to hurt my overall performance, but it could potentially turn into 100,000, depending on what Bitcoin does. These are like options. Owning a small amount of Bitcoin, you can't lose if you own small amounts and you manage your position sizes correctly, but you could potentially win big. Okay, so also, to hedge growth, I buy some FANG-D, okay, because a lot of FANG-U is Yieldmax. If you look at the Yieldmax names, again, most of them are in FANG. So I hedge Yieldmax with FANG-D. I also buy FANG-U to get more Yieldmax capital gains, and I hedge it with FANG-D, okay? Again, I use strict position size management for Bitcoin, and I let CONY and Square cash flow the rest. So if Bitcoin fails, I know I'm going to get paid back through CONY, all right, because it has such a large dividend, CONY and Square. If I let those cash flow the assets over time, not only will they pay for the positions in CONY and Square, but the extra income that keeps coming each month will eventually pay for the other losses in Bitcoin should they occur. Meanwhile, I'm just selling time with these Bitcoin options like Mara and Riot. All I do is just let time go by, and these premiums, I either pocket the premium or I'll close these puts out for gains as time rolls by, okay? And of course, the last way to hedge these Yieldmax names, okay, and even Bitcoin investments like CONY, Square, TSLY, and OARK, it's just to hold them for the dividends, okay? The dividends cash flow the investments over time, quicker than real estate. Okay, they also pay back my margin and reduce leverage in the process. So risk is managed that way as well. When all of my dividends, 150,000 in dividends, pays back my margin debt of 122,000, okay, no matter what the positions are doing, up or down in the market, my dividends just keep coming. They cash flow me. They reduce my leverage, and they eventually wash away all my sins. If I make any mistakes, my dividends pay them all back. My favorite dividend play is Cornerstone. As you guys know, that's why I have 400 grand in Cornerstone. If you go to the Morningstar website, you'll see that Cornerstone is a 5-star fund and it beats the indexes. So this is where I put most of my money, okay, to get not only compounding power, but to sleep well at night. I can't put all my money in Yieldmax names because they have headline risk and can fall by the amount of the stocks. I can't put all my money in Bitcoin because we don't know what Bitcoin will do and they don't pay any dividends. So I have to put my money in Cornerstone because it's 5-star. The dividends don't fluctuate like they do with Yieldmax. And they also have a large dividend. Cornerstone has a 21% dividend, so it's very competitive with Yieldmax. And this dividend's even a return of capital, so it's tax-free. 80% of the dividend is tax-free, and this 21% dividend drips at the NAV. Find me another index fund that drips the 21% dividend down at the net asset value, okay, for extra gains every month. You get thousands of dollars in free money every month from Cornerstone. You get the capital gains that it can provide, and you get the 21% dividend. That's why I put all of my money, my whole account roughly, in Cornerstone. But beware of Cornerstone. You have to watch both the premium levels in Cornerstone, and you have to time this fund around its rights offering. Closed-end funds like Cornerstone, Gove, these have rights offering. They can really level up your account if you know how to play them right, okay? But again, time them around the rights offerings and watch those premium levels. My Volume 4 e-guide instructs you on how to do all this. When you buy all of my e-guides, you get free access to the Discord chat room for life, where we have over 500 members pursuing the FIRE lifestyle. And they're all watching for the alert on the Cornerstone rights offering. So I alert you of the Cornerstone rights offering announcement on Discord. We all will alert you, and you can follow my portfolio there. We also have a Yieldmax channel, a Bitcoin channel there. You name it, it's a one-stop shop for all things FIRE related at the Discord chat room. And again, when you buy my e-guides, Discord is free for life, and my phone number is free for life. So keep that in mind, okay? Plus, Cornerstone is 30% maintenance, not 50% maintenance like Yieldmax. So that's why I concentrate so much into Cornerstone. Anyway, that's how I'm protecting my Yieldmax and Bitcoin positions, okay? If you're interested in your finances and want to live the FIRE lifestyle like me, email me for my e-guides at akintodd48@gmail.com. And if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.